Canada needs more rental housing fast, and it's pretty obvious that there is a big focus on missing middle type of projects, especially in Toronto. The latest priority project in the pipeline might mean that each house on major streets can be allowed to build up to 30 units each. Crazy, right? Well, if you're interested in learning more about this and staying ahead of the curve, keep watching. You've probably heard about the government's focus to create more housing, especially in areas near transit. And Toronto has been leading the way with some pretty interesting initiatives like laneway suites, garden suites, multiplexing, and rooming houses. Now, the next change might give houses on major streets a 180-degree transformation, both physically and from an investor perception standpoint, because they have been highlighted as the next target housing project in Toronto. Instead of the typical 4 units in the main house plus 1 ADU in the backyard, the city is now looking into encouraging more density on major streets. Now, if this project becomes approved, you will be allowed to build up to a 6-story apartment and townhouses on all major streets in Toronto that are currently designated as neighborhoods, which is basically your current low-rise homes. Now, here is a map that shows what's considered a major street in Toronto, and you can actually get this map 3 in Toronto's official plan, and we've linked it down in the description for you below as well. Now, take a look. We're not just talking about Yonge Street or Bloor Street. Smaller streets like Dovercourt or Mortimer would also qualify because they're deemed as more accessible by transit, which makes the opportunities a lot more interesting. Next, let's talk about timelines. The proposed report was released last week on September 28th, and from this point on, the city will be hosting consultations in October, and there's actually going to be a survey that you can also respond to up until November 10th. So if you have anything to say, this will be your chance. Now, if all goes smoothly, the multiplex project should see implementation as early as Q1 of 2024. So, what specifically is changing? Well, the idea is to alter Toronto's official plan, revise our residential bylaws, and tweak zoning permissions on main streets to make room for this increased density on major streets. So now here is a quick rundown of what the proposal report suggests. First of all, the maximum number of stories might go up to 6. The maximum number of units might go up to 30. They're planning to increase the build length and depth permissions, plus the floor space index, FSI requirements, which limit how much area you can build relative to your lot size, will also be removed. From our end, there are still a few questions that still need to be answered. For example, parking requirements are currently waived for up to a 4-plex. So this means that once you enter into the apartment space, which is likely going to be the case for these major streets moving forward, you might need at least 1 parking spot for each dwelling unit. Now, our first question is, will this change given that these new units on major streets are supposed to be more accessible by transit? The next question would be development charges. Right now, DCs are waived up to the 4th unit, and this is a big reason why 4-plex conversions can make a lot of sense. If DCs are charged for these bigger multiplexes, is there a discount to incentivize investors to get this done? Right now, it seems like it's probably not there yet, since the proposal's report does mention that there are no financial implications to the city from this change. But really, how DCs are handled will very much swing an investor from taking on these projects. So the city would need to take a closer look at this part for sure. Now that we're on the topic of returns, let's touch on that a little bit too. Say you add 1,500 square feet of space, which could translate to 2 two-bedroom units that could rent out for $2,500 each per month. If we assume that it costs around $400 per square foot to build, then you're looking at a build cost total of $600,000. Now that's an equivalent to a 9% cap rate on the new portion. And if the existing portion could hit a 6% cap rate, then you might average a 7.5% cap rate, which is pretty outstanding. The other important thing is that you'd now be in the commercial mortgage space, which might actually be better from a scalability standpoint in the long run for the real estate investor. Just keep in mind that this is definitely not for your typical real estate investor. You need substantial capital, likely north of $1 million, to get these projects done, and you're basically in the development space, so you'll need to have the time and expertise here too. The bottom line is that things are definitely getting more exciting in Toronto's freehold real estate investing space. More and more investment options are popping up, making investing in Toronto houses even more interesting. And so, if you are curious and you want to learn more, don't be shy. Just reach out to our sales brokerage because we focus on investing in freeholds in Toronto, and we'd be happy to chat and zero in on what might be best for you. If you found this video helpful, show your support by giving this video a thumbs up and hitting that subscribe button to stay updated with our content. Our channel focuses on a wide range of real estate investing topics in Toronto, from market trends to housing policies, interest rates, and investing strategies. We want to make your real estate investing journey easier for you, and so we offer services like planning, analysis, buying and selling, renovations, leasing, and property management. For more information, visit our website or find us on social media. Thanks so much for watching, and I'll see you in the next video. Bye.